All right, everybody, welcome back to Consensus 2021. It's been a fun week. We've covered a lot of ground this week. We've had a lot of fun. We've done plowed some interesting ground. But we're here to close out the event with our final keynote block. So we're going to be hearing from CZ. We're going to be hearing from Kathy Wood. We're going to be hearing from Tom Brady and Sam Bankman-Fried. And then we're going to close out by hearing from Hayden and Fred of Uniswap. So this is going to be good. So to kick off here, we're going to turn it over to CZ and CoinDesk's own Nolan Bowerly, and we're going to be talking about the Binance Mafia.
Welcome to the end of Consensus. It's been a crazy couple of days, and somehow this event always gets market timing sort of spot on. We threw a dart a year ago and hit the halving right on. Praying that we would hit the days of the halving. And here we are at a moment when the whole industry, was just punched in the face over the weekend, but woke up with all kinds of stuff to talk about and has spent the week sort of realizing things aren't that bad. And now I'm joined with the sort of, poster boy for optimism in the industry, someone who certainly hodled through it. He had no cash. He couldn't buy anything anyway, so there was no buying the dip. He's let the whole world know. Welcome, CZ. Needs no other introduction other than the CEO and creator and founder of Binance.
Hi, Nolan. Thanks for having me here.
It's great to have you, CZ. Now, I got a personal connection with you that we're going to get to in 1 second, but I want to start by asking a bit about a book that went into some of the planning around this event and some of the themes we had in our agenda, which is called The Fourth Turning. Have you ever read it? Have you ever heard about it?
I heard about it, but I have not read it, actually.
Okay, there's a great video that just got put up by Van Neistat, Casey Neistat's brother, and he does a beautiful, he draws it on this piece of paper that they roll down and get a really great explanation. So you can hold the book and watch the 10-minute video on YouTube and you'll get a sense. But what I wanted to get into on it was it divides history up into these 20-year periods and overall 80-year periods. So basically 4 seasons in a year, 4 generations, and a full turn of one of these cycles. Now, with your birthday, you belong to 2 really important groups because there's a bit of an overlap. There's a bit of a couple of years where these 2 generations overlap. In your case, one would be called, it's sort of the Gen X, but also known as the nomads in this book. And the following one would be the millennials, the so-called heroes of this story. So I want to go quickly with the nomad piece first. You moved around a lot. You've moved your company around a lot. You're definitely, every one of these continents. In fact, we have a connection in Montreal. You lived in Montreal for a little while. And so does, it seems, everyone in the industry. Adam Back and even Willie Woo, the person who first told me about the Fourth Turning, lived in Montreal, if you didn't know that. So, tell me a bit about all the traveling that's gone into this endeavor over the last couple of years and what you bring to the table as far as not really being a person from one country, being from all over the world.
Yeah. So I think at one point I did a calculation. I actually didn't move to a different city every 4 years in my life, ever since I was born, on average. So even when I was younger, my parents moved quite a bit. I don't know why. It's just the way it is for work, for their careers. So and I think the guys who moved around, who lived in different places in the world, different cities in different countries, especially, they do have a slightly stronger worldview instead of a stronger country view. So if you talk to a person who has only lived in one country, they think everybody else is like that. They view everything as one country, so they only use one currency, which is whatever fiat currency usually that country uses. And they think about everything from that country's perspective. Whereas when you talk to guys who have lived across different, especially multiple countries, they do have the view that, the US dollar is used in a lot of places, but it's not used everywhere. When you change a country, you gotta change currencies. and they also know a lot of the issues with currency exchanges and stuff like that. So I find that those guys are more inclined to use cryptocurrencies because they don't have the default currency mentality, or at least not as much. So and and also people who have worldviews, typically they compare different countries, they understand the different situations in different places, etc. So they don't get a sort of assumption default view as much. So I think we do see a lot of those, and cryptocurrencies are very useful, especially in cross-country, cross-border transactions, large transactions, small transactions, etc. All of those are very heavily scrutinized if you do cross-border transactions. So I think very naturally, there's a lot of those group of this type of people who got into crypto early, and this is why you talk to them all the time. Yeah.
And maybe some of them, from having the different perspectives that come from being in different countries, they immediately see that not everyone thinks of their national currency the same way. Americans definitely have a fleeting love, and looks like it might be ending for some people, but it's the US dollar can fall into the same bucket as an eagle or the flag. That might not be the case in a lot of other countries. In Korea, for example, they've actively sort of manipulated the currency, as a lot of export-driven countries do. They want to make sure they can export things, easily. With currency controls in that country too, it appears that the people are very willing to trade out of it. And this is a very proud group of people. They love their country, Daehamingu, right? It's a great country, but nevertheless, they'll easily trade it for something else. Now, in all that time that you've seen, can you imagine, China, for example, is that the same there? Is there a love of the yuan, or are minds open to something else because competition is here?
I think there's a couple of different aspects to it. I think everyone's very much conditioned to love their country. So this is what schools teach. This is how we shape young people's value systems. It's like you got to do things for your country, and you got to be proud of your country, and your country is the best thing. It's motherland, etc. So we use those words to associate with country. I think for almost everybody in every country is conditioned to they're heavily conditioned to want to try to love their country, so that's one aspect. I think that's relatively common to almost every country. Every country try to either influence or brainwash their citizens to love their country, because they want to say that, look, the country is doing a lot for you, the country is protecting you, we are one unit, or we're the same kind, etc. So there's a lot of influence that way from every country. The currency situation is a little bit different. The currency situation, some countries have a strong economy. They want their currency to be free-flowing. Some countries still do not think that their currency is strong enough to be free-flowing, and their central banks peg the rates. This is very typical in China. And a few of the less developed countries do this. China is probably relatively developed now in terms of economic power, but their currency is not free flowing in terms of exchange rates. And then there are other currencies which have been manipulated. Like if you for example, you mentioned the Korean won. Given that 10,000 Korean won equals to about $10, that means the currency in the past probably have went through an inflation cycle somewhere, or multiple cycles. So that's the sort of manipulation of the inflation and exchange rates to sort of facilitate maybe export in those countries or some other agenda. But usually when that happens, that means it's not a free economy. The economy was controlled in some way. So there are different degrees of countries influencing individuals. There are many countries with especially right now, going through hyperinflation, where the currency is devaluing very, very quickly, and basically their citizens are becoming poor. And many of those citizens in those countries are flocking into Bitcoin or crypto, to sort of get away from inflation. So even though they may still love their country, but they may no longer love the currency. So there's a few different aspects to it. But in general, we're constantly being brainwashed to want to love our country. But for people who travel around the world, this view is slightly tamed. Like they do have the world view. They say, look, well, a country is a large entity. A country is not a single thing. You can't. There's probably a lot of aspects you love about your country, and there's probably some aspects you probably don't love so much about your country's situation. A country is not one entity, right? Well, it's one like entity conceptually, but it's made up of many small parts. You may like the currency, you may not like the currency, you may like the economy there, you may not like the economy there, you may like some politicians there, you may hate some other politicians there. So it's always important to come to a balanced view, a balanced and delicate view, not a simplistic black and white view. I just love my country or I hate my country. So I think the guys who are more exposed to this type of nuances understands this, whereas guys who travel less tends to have a more black and white view. So but again, this is a very dangerous generalization. There are people who are very well read, even if they have not traveled, etc. And they have different views. But generally speaking, the guys who travel around more tends to have a more balanced view.
Well, I really like the way you described it as well, that there's pieces that you would want to naturally like, and that, some of that brainwashing is probably even great. Like you should love lots of parts of your country, but it's been, difficult to be able to sift through those elements. The state comes with a full buffet of services and features and everything, and not all of them are negotiable in most countries in America and China. You sort of get these things downloaded onto you. So I want to go from being a nomad now and talk about this sort of hero generation and millennials, because it came into exactly what you were sort of describing. What pieces do we keep, as people involved in Bitcoin and cryptocurrencies? We're of course now competing with actual countries, right? In all kinds of areas. We've put private money out now. We're competing with regulatory systems, really about liquidity events and spreading capital and being able to raise capital, right? That was, one of the great things that you managed to do in the 2017 run was sort of predict that there would be a whole lot of, let's call it rainfall. Like when we were trying to cover, you in 2017, we came up with a theory that crypto is not bull and bear, it's monsoon and desert. And whoever's there to catch the monsoon rains is going to do real well. And in 2017, Binance really understood that people wanted to be able to trade multiple coins, and they wanted that kind of liquidity. But since then, you've anticipated and built a lot of interesting things with your own infrastructure, BNB Coin, to really start facilitating more competition and more of these liquidity events, and really an individual that doesn't have to take on all of these state apparatuses, right? That they're able to, put a crowdfunding effort into a can and it's Campbell's soup after. So I want to talk a bit about where you see some of the stuff going with crowdfunding, because I know within Binance Chain there is a lot of focus on these early stage efforts. So talk a little bit about how you see that fitting in to almost allowing people to start choosing which state infrastructures they would like to adhere to. And I even mean, securities regulators and all that kind of stuff.
Sure. So I think with the sort of millennial generation, or especially I think just people now, I think the way I describe it is really just increase their freedom. Without sacrificing other aspects, hopefully. So if we are able to increase freedom in one area without sacrificing security, ease of use, etc., and if we can do that, then our civilization generally advances. So we can look at a few different examples throughout history, right? So the freedom of information given by the internet in most countries today, freedom of speech, again, in certain countries today. And before that, freedom of education, freedom of press, freedom from slavery. So anytime we are able to increase the freedom without sacrificing other things, then our civilization advances. Today, I think cryptocurrencies, I don't view them as competing with regulators. I think this is a way for us to work together so that now there's a new tool that can increase the freedom of money and all around the world. Let's hopefully we will not sacrifice the security, stability, ease of use, etc. So I believe there are ways to do that. Some different people have different ideas, of course, but I believe we have ways to not sacrifice security, but also increase the freedom. The freedom includes freedom to raise money all around the world for your projects now using cryptocurrencies, and we use that for Binance. That's a successful example. There are of course many failure examples. There are also many scams, but this tool can be used properly for serious entrepreneurs to build a real business. And then through the sort of short history of crypto, there's like different stages as well, right? So the first stage was just Bitcoin. That was called the Bitcoin industry. And then 2017, we have the sort of ICO boom. And so we have a lot of altcoins coming out of that. Even before there was a lot of altcoins, but the altcoins had we were able to do blockchain fundraising from 2017. We went through a sort of a cycle, but now people still do successfully raising money on the blockchain, either IEOs, ICOs, IDOs, IFOs. There's a lot of them now. And then now we're going into the sort of DeFi NFT phase, which seems to be picking up. So we'll see what happens there. But from a monsoon and sort of desert perspective, yes, we do go through the cycles. Markets do overswing in both ways. The important thing is I encourage people to try to catch the trend and to grow their business, to grow their project. But then you gotta in this particular industry, you really have to be prepared to last multiple cycles. So you can't just go one cycle and then. Well, some people actually, some scammers or lazy people, they raise money and then they quit. That's what I call a scammer. But for the long-term builder, we have to go through this multiple cycles. So we need to keep large amounts of cash reserves, etc. But overall, though, I think what we're doing, what this new generation care about is just more freedom of money. Just more ways to use money freely without sacrificing security and ease of use. And I think crypto provides a way to do that. And we can do that in a compliant way. We don't have to compete. We're not going against governments. So we don't have to sacrifice the security aspects of it. So there are times where the regulations or rules are not super clear. And they're still being established in most parts of the world. So there are some gray areas, etc. But we just got to experiment and work together and figure that out.
So when you're, I've noticed a lot of these mini apps coming on, and they're really adding all these new features into the actual Binance app. I saw that you've got hotels now. I saw that you're able to, convert, it looks like various stable coins to be able to pay for those hotels. So can you describe a bit what an individual living without, you can say at one point that it's working together, but a lot of these institutions have enjoyed a monopoly. So working together sounds great, but they might not let it go so easily, especially when apps like yours, really show the true power of these technologies, that you really can just choose what you want to pay with all the time. It really does allow you to choose your own money. So, from that point of view, do you see, we've got all these tensions in the world right now, and countries are disagreeing, but one way to frame what's actually going on is that it's not countries themselves that are inching towards a World War III or something like that, but a major turning, a major change might even be between nation states and individuals. I think you're in Singapore now, I've heard, maybe, and there's other people in Singapore that are talking a lot like you, that the network state is actually where things are headed, and that individuals with all of these tools are going to be able to express themselves in ways that we've never seen before. So is that something that you're building towards? Are you, you can say we're going with nation states here, but there's folks who are just going to be so unbelievably dexterous because of the tools that you're building. And that's where I see some of this hero generation stuff playing out, right? That in a sense, the way we look at some of these great divisions that won World War II, and we made movies about the Band of Brothers and all these kinds of folks and, heroes, one can imagine that early crypto folks are that sort of battalion that's going in to win a war that we're not even calling it that yet, but that is starting to look more and more like a major turning in that direction.
Okay, I guess you may have been reading Balaji's book.
I sure am.
Book
Yeah,
that
it's always, it's definitely on my head. Definitely on my head.
Right. So yeah, so I think there's different ways to term it, to label different things. I think the world is constantly evolving. There's always new technologies, and new technologies are always being developed because we live in a mass sort of a mass population, right? So there will be some people working on different parts of different technologies. And blockchain cryptocurrencies is definitely a new technology that's being worked on. And it's like the internet or the computer. Computer speed advances like doubles every 18 months. And not because of one single individual, it's just because there's so many people working on different parts of it. And then just, either the CPU becomes faster, or we get faster memory, or we get faster hard drives, etc. So I think there's a collection. There's a lot within crypto. There's probably a few 100 million people who have crypto now, and there's probably I don't know what the number of developers are. Probably like 100,000 or more, a few 100,000 developers in the ecosystem. So this technology will continue to evolve, and it will continue to grow. And I don't think anyone can shut it down now, given that it's a technology, it's a concept. Once the concept is in 500 million people's heads, you can't erase that. So so the industry around the world will just continue to evolve because different people are improving little pieces here and there. And then whether it's a competition or whether it's collaboration or whether you want to go against it or embrace it is completely subjective to yourself. If you view something as competition, then if you feel threatened by it and you want to fight against it, then that's competition. But if you want to embrace it, that's opportunity. That's collaboration. So I can imagine that there are traditional financial industry, not traditional, just any financial service or any company can go against it. Say, okay, now this thing threatens my way of life, and we're going to fight against it. We're going to try to kill it. We're going to stay our way. We're not going to evolve with it. Then that's competition. There are organizations that will say, well, look, we used to run a traditional business, but now we got this new tool. Let's figure out how to use it to our advantage. Then that's very helpful for you. I mean, I'll use a bad example, but it's not inconceivable that some bookstore could have launched the most popular e-commerce site instead of Amazon, right? So it's totally conceivable that like today we live in a world where Amazon dominates e-commerce, but it's totally conceivable that some traditional business could have done it. The technology was there, the choice was there. There wasn't anything that Jeff Bezos had that nobody else had. So it's just that Jeff Bezos somehow executed better on his business. So I think there's a competition, there's collaboration. In terms of nation states, like we have no, I mean, Bledge is writing a book about it. I read the first couple of chapters he has written so far. But we have no interest in doing that. And also that's a fairly weak definition of a nation anyway. It's a nation without borders. It's basically just, you can call it association, you can call it a group of people, you can call it a company. Facebook has like 3 billion users, right? So they're probably the largest group on the planet by that definition. Do they have a lot of influence? Yes, because people do spend a lot of time with it on their apps. Social media sites like Twitter probably have some influence, could have impact to like, I don't know, even election campaigns and stuff like that. So, but are we really competing with nations the way it's commonly defined? I don't think so. But I think the technology offers more choices for people. So it does offer people a new way of using money, transferring value. And this is something that wasn't available to the human civilization before. Before we have to use some state-owned, state-issued unlimited supply mechanism. Today, we have a new mechanism that we could choose to use, and it's an additional option. I think the best way for states to not look at that as competition is to say, look, this is a new technology, we should embrace it. In whichever ways this new thing's better than the existing ways, we should try to copy that. We should try to embrace it instead of trying to fight it off. Fighting it off probably may work in the very short term, but will have very detrimental effects in the long term. You can't fight technology evolution. It's going to evolve over time anyway. So so that's kind of my view on that. So I don't view that as competition. I view that we should be able to find ways to collaborate with current nation states, regulators, governments, central banks, commercial banks, traditional businesses, so that we can help bring them into this, embrace this new technology to let them grow. So that's the way I look at it.
Sure. So, but your let's say comparison would require a lot of work on the part of, in this case, let's say CBDC issuers, right? So we hear a lot about how, CBDCs are going to do this, and of course we're seeing what's coming out of the renminbi, and it's pretty interesting, but it's nothing like the iterative approach that Binance Coin, that BNB took, that found product market fit, and then began to iterate on having its own chain, then an EVM, and then a stable coin, and pieces have been put into place over years. Was there a design from the beginning to do it this way? Or was it, okay, we know we can do this. Binance, the BNB coin is a pretty good distribution platform. I saw the 4 million Twitter followers today. I've seen the time on sites, it's 50% of all time spent on all exchanges is just Binance alone. So the distribution channels that you guys have created are incredible. And, I want to hear a little bit more, like I said, you found product market fit, and then you iterated on this product for years now. And now we're back in one of these monsoon seasons, and rain is falling, and you've got pancake swaps, and you've got folks that are inventing all these new, pieces, these new Legos that are jumping on top of it. So, a little bit about just the iterative approach that you guys have taken, and where it's led you, and where you think you're going to be gathering even more of those monsoon rains coming up.
Sure. So, I think. Well, first of all, nothing's very much planned in Binance. So none of that iterations are through central planning or by myself or stuff, or I had a clear strategy for it. I don't believe those things work, or at least I can't make those things work. I'm not smart enough to predict what's going to happen, which one's going to be hot, which one user is going to adopt. The way Binance is organized is that we just have lots of experiments. I think Google does this as well, right? So Google has a 20% time for you can work on any project you want. Google made a lot of acquisitions, a lot of investments. They hire a lot of smart people and let the smart people do whatever they want to do. So based on my limited understanding of Google, I think that's what they do. And that's kind of what we do, but we try to do in Binance as well. I don't make any top-down. I try not to make any top-down decisions, especially on big projects or big products that we want to launch. Almost all of our product launches, all of the new features, even a lot of the new ecosystem projects, they like guys who want to do those projects themselves. I believe if I have an idea and tell somebody to go do it, they'll probably at max do a 50% job, because they have a different mentality. They may or may not have the idea. They may or may not even get the idea. They may even think it's a stupid idea. That's probably the case most of the time, to be honest. Whereas if they have an idea themselves, they will be very eager to do it. It could be a good idea, it could be a bad idea. But a small percentage of them turn out to be successful. That's how new experiments work. And then, but as long as we try enough experiments, we get a few of them. So, for example, like what you mentioned, the stable coin came out of nowhere. The mini app came out of nowhere. Binance Smart Chain came out of nowhere. So it wasn't my ideas. It was, and most of the time, my contribution to those things were just, okay, that sounds good. Go for it. So that's pretty much my contribution. We did provide funding support for most of the projects, especially at the early stage. So we took away some of the risk factors for sort of what we call entrepreneurs or founders or even entrepreneurs as well that are outside of the Binance central team. So it's a more dynamic way to grow organizations. I think we should just give people the freedom and empower them, and also have the right incentive structures for them, so that if the projects do well, they get incentivized properly. So it's just working out those mechanisms, where I think the speed of iteration and the ability to iterate is much, much more important than having a good strategy, hiring strategists, and coming up with big plans. And this is not against any traditional financial industry or anything. Just any company, any organization that's not able to iterate in today's world will be phased out eventually, with or without cryptocurrencies. Even if cryptocurrencies does not exist, we've seen that over time, even before the internet, organization who does not adapt, who does not iterate, who just want to stay one way, eventually gets phased out because the world has changed. So I think it's important. This is not. There's nothing to do with cryptocurrency. There's nothing to do with Bitcoin. If you work in an organization that doesn't want to evolve, you most likely, well, that organization will almost be guaranteed to be out of, to die sooner or later. So. This is nothing new to crypto, which is just that crypto is one of the technologies that's evolving relatively quickly. And crypto does have an impact on the financial ecosystem for sure. And it's probably the one of the first industries that cryptocurrencies will disrupt in somehow. And for Binance now, so my mentality is we want to provide a platform for people to flourish on our platform. So this is why this is why the guys designed the mini app architecture, where we now have the infrastructure where third-party developers can develop apps within the Binance app. And then this way they get access to all the cryptocurrency payments infrastructure, crypto payments transferring later on, maybe fundraising and other features we provide. So now they don't have to build their own wallet. We have one of the largest active user bases in the industry already, and we want to have other people be able to build on top of that. So and Binance Smart Chain is a independent blockchain. We don't have control over it. But we did sponsor it, and we also get an advantage from it, benefit from it, because Binance Coin is the native coin that runs that blockchain, and it's a coin that we are very heavily associated. We hold a chunk of it, and we get benefits that way. So we lend branding support to it. But now the Binance Smart Chain ecosystems, the projects on there, they're running very independently. Like if I talk to them, they will of course talk to me, but I don't talk to them at all really. So we try to build an ecosystem that just sort of evolves quickly, and we give. I think number one, we got to give people the freedom. We got to give them the right platform, and we want them to have their own incentive structures. Now with a token, people can come to their own incentive structures quite quickly. And so I think, yeah, this industry is a new industry. The guys who are in this industry are early adopters, and they iterate much more quicker than sort of the bigger traditional businesses. But it's nothing specific to crypto. As a business, you got to evolve. So yeah, I think, yeah, that's how I look at things.
But only crypto can do things like social tokens and all these new mechanisms that we'll have to launch. What are you looking at that is going to be a place where you're going to be gathering some of these monsoon rains? Are you looking at social tokens for next time around, or what is it that's got your eye right now?
I think, this is the hard question. This is like the next monsoon, where is it going to rain? Is the hard one. To be very frank, if you ask me even in early 2017, like what's the next big thing, I probably would not have said ICOs or blockchain fundraising. But like when that happened, I realized it. I was like, okay, it's already happening. Let's just try to catch on to it. And even we try to catch on at a very early time. We're not sure if it's going to be big or not. So when I first started Binance, I wasn't sure it's going to be so big. Was like, okay, let's try it. And to be honest, most of the things I thought that was going to be pretty big, they actually didn't pan out to be very big. And if you ask me early 2020, what's the next big thing, I would not have said DeFi. I know DeFi was already kind of trending. It was around. If I asked me earlier this year, I would not have said NFTs. So most of these things I can't predict. I believe, again, the important thing is to recognize the trends and just execute quickly. So now the NFTs kind of training right now. So we just got we have multiple teams that wants to do NFT marketplaces. One group wants to do a centralized one on Binance.com. So you'll be nft.binance.com. There's another group which wants to do a on-chain one. So you'll be featured.markets by Binance. So just two different groups that we're sponsoring to do. So and again, in 2 years, NFTs can be huge, or it can be you can wind down. Who knows? So the approach is not to predict, but just to be able to out execute people, or have the strongest execution. And Yeah, so on the monsoon season, though, I think we will go through cycles. Bitcoin halvings every 4 years. So we have seen historically that's a 4-year cycle. Stock markets have a 4-year cycle. So my recommendation to people in the industry is you got to last multiple cycles. If you just want to raise money and cash out, then you're basically a scammer. So you got to raise money. If you raise money in this cycle now, be prepared for like another cycle over 4 years. There will be some downturn. And then you'll flourish the next 4 years later, 8 years later, 12 years later. So you got to have those kind of mentality. So I don't know what the thing is for the next cycle or this cycle, to be honest. But we have a lot of different experiments here and there. We just have to see which ones take off. And the worst case, then nothing takes off. Then we got to work harder.
So it's iteration. And there's definitely 4-year market cycles, but like your parents trained you to be able to move and reinvent yourself every 4 years, you're well prepared for the waves that come in this industry.
Absolutely, yeah. I think in this industry, you have to do that, yeah.
Great. Well, thanks a ton for your time, CZ. It wouldn't be a consensus without a little connection with you. So we'll see you the next one. Thanks for joining us again this time.
Yeah, no, thanks for having me, and everyone, thanks for watching, and thank you for your support in Binance. Till next time.
Thanks.
All right, and we're back. Thanks to CZ and Nolan for joining us. I find it incredible how Binance and CZ are able to just really consistently out hustle the competition, continually reinvent themselves. It's really it just epitomizes everything about this industry, really. Moving along on our final keynote segment here. So throughout this event, we've been running a series of sessions called Human Oracles, where we've basically been highlighting the investors and the thinkers who have been pretty much been consistently right, reliably over the last few years, even throughout the depths of the bear market and some of the uncertainties. And essentially, these are the people that you should have been listening to, if you weren't. And perhaps nobody fits this criteria more than Cathie Wood of ARK Invest. So we are fortunate to have her here joining us for a session with NLW entitled Cathie's ARK, Discerning Up from Down in the Bull Market. Welcome, Cathie.
All right, welcome back. And I am so excited for this conversation. Cathie, it is wonderful to be here with you again.
I'm very happy to be here, Nathaniel. It's been lots of action over the last 3 months. So let's talk.
I mean, it's wild. Since we talked, so much has changed in such a short amount of time. Let's just start, I guess, with the question that I think everyone is trying to sort through right now, which is, are we still in a bull market? Have we shifted into a bear market? Is there some weird dead cat bounce thing going on? Where are we in this market cycle? And is the cycle, as we normally think about it, even the right heuristic to use anymore?
So we're talking about crypto here, right?
Yeah, crypto specifically, yeah. But I mean, turns out it might involve not crypto as well in the answer to that question. But
actually, well, we just saw a 50% drop. So this idea of a super cycle that would never happen again, well, that's out the window. And I do think it was precipitated by the ESG movement and this notion, which was exacerbated by Elon Musk, that there are some real environmental problems here with Bitcoin, with the mining of Bitcoin. And so I think that a lot of institutional buying went on pause, shall I say. And I think there were a lot of expectations that there would be follow through by institutions. We wrote a paper it was September or October, saying that we did believe this new asset class was finally getting the respect that it needs from institutions. There have been some leaders out there, certainly by Fidelity and Mass Mutual, and then on the balance sheet, you've seen Square and Tesla and MicroStrategy, of course. And all of these we thought were teeing up the institutional world for some real participation in this space. We think some of that has gone on pause. But we think half of the solution is understanding the problem. And I think that this auditing of that miners, certainly in North America, are willing to do around how much of their electricity usage is generated by renewables is going to bring that topic into stark relief and will encourage, we believe, an acceleration in the adoption of renewables beyond which otherwise would have taken the place. I don't know if you have seen the paper that ARC and Square collaborated on around this notion that when you're dealing with intermittent energy sources like solar or wind, it would be very nice and remunerative for the ecosystems out there to include Bitcoin mining. So when you filled up the storage, it can spill over into mining and probably will enable then an overbuilding of a solar because there is now more of a profit motive associated with it. I'll just say one more thing on that. I was surprised to see this already in motion. A company called Talon Energy last Friday, merchant power producer, announced that it's raising 800 or would like to raise 800 million in the equity market, 300 million of which would go to just this ecosystem, including Bitcoin mining into its ecosystem so that it could encourage the proliferation of solar and wind faster than otherwise would be the case. So again, half of the solution is understanding the problem.
Well, I think maybe this gets at a follow-up question, which is how much you think the key inflection point here is going from the idea that Bitcoin can incentivize green energy, that it's sort of these sort of vaguely stated narrative arguments that we have in places like Twitter, to actually having miners have to put their money where their mouth is. I mean, is this just actually ESG risk now being priced in, where the cost of switching to these other energy sources is going to be dramatically less than whatever sort of fights we have to have, either from a regulatory perspective or just from a pure perception perspective?
Okay, if I understand the question correctly, you're asking me, is this just ESG driven, or is this going to be a real change in behavior? It's not going to
was this sort of almost always coming in terms of the, we fought the narrative battle around Bitcoin energy for a number of cycles, and now it's kind of, you're actually seeing companies make these shifts in a much bigger way and try to create the incentives to make it make sense?
I think so. I think the market's demanding it. And to be honest, we had been watching how much of the electricity was already being produced by renewables. A lot more, as we learned, in China. Somewhere between 40 and 60%, I think, is the percentage. Partly because miners would shift to different areas, hydropower and other maybe wind power, when it seemed productive to do so. So we thought the argument was somewhat overblown, especially when you think about it. Any progress is going to use more energy, right? Are we saying Bitcoin is progress, but it can't use more energy, and it happens to be already more renewable, especially in some of the biggest countries for mining, than I think most people appreciated. So the utility value here of Bitcoin and other cryptos is such that it is progress. We think it's the first global monetary system in the world, rules-based, There's huge utility to that. Now, maybe we in the developed world do not appreciate this as much as those in the developing world, where there are more corrupt regimes and where they lose their purchasing power regularly, and they can lose their wealth regularly as well from confiscation. Huge utility value here. And so real progress in terms of helping those who are living in those very difficult areas. So how much do we pay for this? Well, if you listen to the UN and look at the Sustainable Development Goals, helping individuals maintain their wealth and their purchasing power is a huge advance. It could be for 3-4 billion people on the planet who would not have this opportunity. So we're talking about energy usage in isolation. What is the utility? What is the progress here we're talking about? It could be enormous. And I think the market will come around to understanding that.
I think this gets at a fundamental point that I've heard others, I think Joe Weisenthal from Bloomberg, make, that the energy conversation has too often come down to the simple binary of whether you think Bitcoin's energy usage, whether you think Bitcoin is valuable. And everything else is totally incidental to that. And so to some extent, what you're saying is we need to also, even as we're exploring this sort of new green energy approaches, get back to or have the conversation about why it is valuable as a thing to spend energy on.
Absolutely, without a doubt. That now, as I said before, I mean, we did write the paper with Square, in collaboration with Square, about how to introduce mining into a renewables ecosystem. I think that's a very productive discussion. And actually, as I said before, will proliferate renewables much faster than otherwise would be the case.
So I want to shift over to China. You kind of bridged into that topic, but I would be remiss if I didn't ask, were you surprised when Tesla shifted course quickly? And what do you think? Do you think that Elon and Tesla are going to be a positive force for this moving forward?
I have both the equity in mind and Bitcoin in mind. So can you clarify the question?
Sure. So Tesla shifted course. They said that we're not actually going to accept Bitcoin for the purchase of vehicles anymore. That kind of triggered the first leg down of what has now become a multi-leg down. And so it might not have been them at all, but it was certainly blamed as such. And so the question is, were you surprised at that particular move? And then two, over the medium term, the long term, do you think Tesla and Elon more specifically are going to be a force for kind of positive change in this space?
Well, first, I think what happened was that Elon probably got a few calls from institutions. I noticed that BlackRock is their number 3 shareholder, and Larry Fink, is the CEO, is focused on ESG and especially on climate change. So I'm sure BlackRock registered some complaints, and perhaps there are some European very large holders, and Europe's extremely sensitive to this, more so than the US in many ways. And so he probably wanted to reassess the situation, saying, wait a minute, what have I gotten into here? Do I not understand the environmental impact? And so now I think that he has encouraged a lot more conversation, a lot more analytical thinking. And I do believe he's going to become a part of the process. I think he'll be very happy to introduce Bitcoin mining into a Tesla ecosystem, maybe working with merchant power producers or what have you. And I think, he started Tesla because he wants to save humanity from ourselves, from environmental disaster. I think he'd like to be a part of proliferating solar and other renewables faster than otherwise would be the case, not just for selfish reasons having to do with his solar roofs and the power walls and so forth, but again, for the same reason he started Tesla. And one thing that this has done for us at ARK, we have never invested in solar. And the reason we've never invested is we need to believe that within a 5-year time frame, without subsidies, an industry is going to be able to hit escape velocity and be profitable. We have not really been able to say that in a big way about solar. This dynamic might change that. So I'm actually quite excited about it.
That's awesome. I want to shift just because I have you for limited time and there's so much to cover, but let's go over to China. I mean, so this is, of the kind of fear, uncertainty, and doubt that has been blamed for the recent market downturn around Bitcoin and crypto. Obviously, the ESG and environmental concerns exemplified by Tesla were one part, but then the other part has been moves from China, it seems, to crack down on Bitcoin mining, on trading. We don't really know yet exactly what those moves are. We just know that the source that they're coming from. We're now at the vice premier level for some of these concerns. What do you make of what's going on in China? Do you guys have a position yet on what's happening, or are you kind of still in that wait and see position as well?
Well, the early read on it was the way the message came through was not from on high, Xi Jinping, but through some other organizations to the central bank. And it seemed as though at the time that message was not going to bear as much weight as many people expected. I think China's always thinking about capital controls and making sure that it has control over that situation. And I think it is also thinking about its own digital currency and the digital currency electronic payment protocol, which is separate and distinct from the currency. It is what China wants to proliferate throughout Asia and potentially the world, if it could, make a very easy payment platform so that trading from one currency to the other is a snap and not costly at all. So I think they'll have some luck in Asia and maybe Latin America, maybe not elsewhere. So I think they have a grand plan to encourage the digital yuan and encourage this DCEP, the digital currency electronic payments protocol, so that it can proliferate throughout the region. And, it's always got a big surveillance in mind. I think, again, that often comes back to capital controls. So I don't know. I am not a big believer longer term that capital controls are going to be possible longer term for China. In other words, they'll have to crack down harder and harder. But they seem to be opening up in other ways. So I think they've thrown us off. I do remember, though, in 2017, when they shut down their exchanges, Bitcoin went through a downturn, and then we were on our way to one of the biggest bull markets that Bitcoin had ever seen. So I think it's 2 steps forward, 1 step back, often with China, and I don't think any of us know what's really going on there.
Yeah, I mean, I think that's one of the only really reasonable positions to take on it. And I think it's fascinating to see how many people are having a conversation now about whether this is actually a good stress test to how much control can a government exert over Bitcoin. The network, will hash power just flow to new places? Might those places actually have a less carbon dense footprint than China even would, which is just a fascinating shift to see.
Yeah, and we saw with the exchanges, those moved over to Japan and Korea, and I think Thailand, if I'm not mistaken. And I think the same will happen with mining. I do, again, because of what Bitcoin is, the progress that it represents.
Absolutely. So let's talk, I guess, a little bit about some other aspects of the crypto industry. Obviously, you've been in Bitcoin for a long time. You've had evolving opinions on that, and kind of, or a long duration opinion on that. But you spent more time around DeFi and Ethereum. I remember even when we talked last, you were starting to spend more time there. It looks like you've been allocating to Grayscale's Ethereum fund. What is interesting to you about Ethereum and DeFi right now?
Well, we're so interested that we've hired an Ether miner. I mean, he's going to be part of our fintech analyst team. But we're intrigued by stable coins, DeFi, of course, NFTs. And we're also very interested that developers are migrating very, very quickly. I always say to our analysts, follow the developers. Let's see what they're doing. Because that's a very loud signal, and it has become inexorable here. So we're excited about everything being built on top of the Ethereum network, and the progress towards the new protocol. So I felt that, and so did Yassine El-Madra, our crypto lead analyst, and Brett Winton, our director of research. We felt, look, we need to learn more about this. We might have seemed like Bitcoin maximalists at the time, but again, follow the developers. I think we're talking about very different use cases, Bitcoin versus Ether.
How do you guys, if there's a simple, dumb heuristic of those different use cases, or do you guys broadly have kind of a distinction in how you talk about and discuss them in terms of how you see them playing out?
Well, I do believe that Bitcoin is the first global monetary system, and controlled by no one. And I believe it is a store of value, first and foremost. And that we'll see what the second layer, how the second layer solutions progress from here. It's a settlement network, to be sure. It has a lot more value than just store of value, but that is a very important use case, as well as protecting individuals and businesses against loss of purchasing power and confiscation of wealth. Ethereum is, from a decentralized finance, a DeFi point of view, I've been really impressed at how it's proliferated, and also impressed at how it survived the tests it's been through, especially the leveraging up. I mean, the coronavirus crisis was a good case in point. It survived all of that. And I'm not operating within the DeFi space myself, but I'm talking to venture capitalists and others who do. And again, in this go around, they've been very impressed at how robustly all of the DeFi services are operating throughout this volatility. That's also very important, these test cases.
So I guess I want to shift over to the markets. I was triggered by the follow the developers thought. I want to talk about maybe tech more broadly outside of crypto too. But one last crypto specific question is, so Ray Dalio announced a position earlier this week at the Consensus conference, where he announced that he had some Bitcoin. He was very nondescript about it, but it's a big shift, right? It's a big shift for someone who's been a skeptic. His major concern continues to be this idea that if it gets too successful, governments will ban it, that it's its own worst enemy in some ways. What's your take on that fear, that concern? Are these private currencies doomed to inevitable fight from state level actors if they become too big, too successful?
Well, I guess I'd answer that the same way I'd have answered a question at the time about the internet, which was in the 90s, because this sort of conversation was floating around. There was a lot of suspicion. And I think the right answer there, and I think most countries know this, is that they did not want to prevent that kind of innovation from taking root. They didn't want to miss the next big thing. And the US didn't. and led that charge. I think many other countries have gotten wise. And they're all trying to say, let's have a better regulatory footprint here so that we attract more innovation. And I think that is going to happen with, or already is happening with cryptocurrencies. The US has been, very confusing from a regulatory point of view. There's no throat to choke. So I think a lot of people say, whoa, look what happened with Libra, now Diem. Well, there was a throat to choke there. It was Facebook. In this case, there is no throat to choke. And if leaders understand, regulators understand, look, the internet was conceived without commerce in mind, without DeFi in mind. And this is just satisfying a big missing piece out there in the internet that should have evolved way back then. I think they will be a little more friendly over time. I think everyone's trying. I know India has not been friendly, but even India, it banned it and then it allowed it and then it bans it. So there's a little bit of a schizophrenic. Do we want to miss the next big thing? Is this going to cut us out from the rest of the world and progress in some way that we don't understand yet? So I'd answer it that way. I think it's already on its way, and it'll be impossible to shut it down, I believe.
Well, this gets at something else that I know that you think about a lot, which is how innovation proliferates and almost creates a different dynamic geopolitically between different governments that actually have to think about innovation, the attraction of talent, the retention of talent as a vector, right? And you brought up the example of India. There have been a number of projects that are from India, from Indian developers, from Indian entrepreneurs that are now getting bigger in the context of DeFi in particular, but crypto in general, which creates a whole nother dimension to their conversation around it. When we talked before, it was right after the election, I believe, and we were trying to figure out, or I was asking you what you thought about the new administration coming in. And it's still early, but are there any particularly negative or concerning signs around not just crypto, but innovation specifically? Is there anything that you've seen that's more encouraging maybe than you would have hoped for? Where does the administration stand in terms of supporting innovation so far?
Well, I mean, I'm very happy that Gary Gensler's at the SEC and that Valerie, who's the director of research on crypto specifically, even before he got there, was promoted and it now is reporting to the head of the SEC, in this case, Gary Gensler. So I think open-mindedness there, that's very good. In terms of the killer capital gains tax rates, could become problematic, but we're hearing that the House of Representatives and the Senate are just so close in terms of Democrats versus Republicans. And we've got midterm elections next year that already the gridlock is starting. And I'm seeing more and more about enforcement as being a big revenue gen. The history of it is that it never, but if they want to do something else, if they think is going to be more effective, more power to them. I'd prefer something, if the conversation is going to change, I'd say I'd prefer it to go there than raising the capital gains tax rate the way they were suggesting. It could have gone to 43.4%. I think the odds of that have gone down. I think part of the bear market that high volatility, high multiple stocks have been through in the last 3 months is related to that. And I think we're seeing some relief now. So I'm a little more optimistic. And it's mostly because there's gridlock. And that's usually a good thing when it comes to government and policies that harm innovation.
Yeah, that's kind of where I wanted to go, just as we start to round out, is the larger macro context. I mean, one thing that a lot more folks in Bitcoin and crypto are talking about is to what extent the larger macro cycle that we're in is going to influence crypto. And I guess, you started to answer this a little bit. There's some jitters and fears about a pretty big shift in terms of where we are in that cycle. But, what's your take on where the macro environment is now? What are markets thinking about? Is it all about that gridlock? Is it just about whether we're going to have a taper on interest rates? Is there a larger kind of conversation shift happening?
Yes, I think the shift is inflation. And we had been expecting this base effect and supply chain issue or set of issues for quite some time. And I think we're not worried about inflation as time goes on here. We are thinking the much higher probability is deflation. I know most people think that's crazy given what's going on, but we have seen a crack in some commodity prices already, lumber, an important one. What we think has happened here is consumers have spent the last year spending their money on the only things they could, and those are goods, durables and non-durable goods, right? And businesses were behind the curve even before the coronavirus because of an inverted yield curve. They were afraid of a recession. That's what all the economists were saying. And there was also the US-China trade conflict and all the saber rattling around that. So they were fearful and positioned conservatively. They shut down at the beginning of the coronavirus. The consumer took off because buying goods, and now being vaccinated, they're going to shift their market basket from goods to services. Goods are only 1/3 of the market basket. Services are 2/3. So I think what's going to happen here is businesses, which may be double and triple and quadruple ordering right now to try and get supplies, they're going to get those supplies as the market basket is shifting towards services. And I think commodity prices are going to have a significant fall into next year. I don't know how soon this is going to start, but that's what. And then on top of that, there are two sources of deflation that I think investors are underestimating. They're underestimating the one I just told you about, but the other one is the good deflation coming from innovation. So we're seeing, just to give you a provocative statistic, artificial intelligence training costs are dropping at 68% per year, a rate of 68% a year. Now, artificial intelligence is going to be permeating every industry and every company, we believe, around the world, any company of any size. And so this deflationary force is going to develop more momentum. And we have deflation associated with each of the 5 major platforms: DNA sequencing, robotics, energy storage, artificial intelligence, and blockchain technology. Major deflationary forces, cutting out middlemen in the case of blockchain technology, and therefore cutting costs. And then there's a third source of deflation. So you've got the cyclical commodity, you've got the innovation related deflation, and you have what we call bad deflation. Many companies post the tech and telecom bust and the 08-09 meltdown became short-term focused, and shareholders even more so. And so the shareholders said, we want our profits and we want them now. And so what did that mean? Leveraging up to buy back their shares to increase earnings per share and to pay dividends. And so what did they not do? They did not spend enough on innovation, and their products are going to, and services will end up being obsolete, and they'll have to service all that debt by cutting prices to move goods. So those 3 sources of deflation, I think, are going to be much more significant than I think the consensus view now anticipates. And in fact, quite the opposite. I think most headlines are around inflation. Interestingly, since the end of the first quarter, bond yields have gone down while commodity prices, until very recently, were shooting up. In 2006, the last time I experienced that, we bet on bond yields being right, and others were betting with oil and everything on commodities being right. The bond market was right. You know what we went through in 08-09. I actually think we're setting up for big surprises on inflation to the low side, and growth also. I think any company on the right side of change, those 5 platforms, is going to enjoy exponential growth opportunities, the likes of which we have not seen before, except for maybe Amazon over the last 20, 25 years has been the poster child. But then on the other side of that is the disintermediation and the disruption that we're going to see in the traditional world order. And that's going to cause a lot of confusion. That's what I think we're seeing here. I think the bond market is picking up on this. And as I mentioned before, I think commodity prices will follow.
Super interesting, provocative thoughts to leave on. Kathy, it's always a pleasure to speak with you. I guess if I can ask you, it's maybe too much, but in just a second or two, does Bitcoin still have a place in the world of deflation that you articulate, given how much of its narrative has been inflation?
Well, and it's an excellent question. Many people are saying, well, if you don't believe inflation's a problem, then, well, I don't believe it's a problem in the developed world embracing innovation like this, the more mature world. I think, though, in emerging markets, if commodity prices come down, a lot of them are linked to commodity prices. Their currencies will come under pressure. And I think what will happen as their currencies come under pressure, the velocity of their money will increase as more and more of their populations shift into Bitcoin and other crypto currencies and assets. And so I think and this is always true when you're talking about currencies, inflation, deflation, it hits different regions of the world differently. And so I think that a lot of currencies, and I wouldn't be surprised if the euro is among them, because there are still a lot of tensions in euro, not just in the Eurozone, not just North and South, but now East and West with Eastern Europe. So I think the mother of all surprises in terms of currencies could become the euro out there. So I think there will be this insurance policy that a lot of individuals and businesses will be taking out. And in fact, I wouldn't be surprised if some of these emerging market central banks start accumulating Bitcoin and other currencies. So because if they know their currencies are going down, and that they will be under attack as reserves go down, maybe they'll have a balance with Bitcoin and other crypto assets.
Amazing thoughts to leave on. Kathy, like I said, I appreciate you every time we get a chance to talk. And I know everyone who's watching today feels the same way. So thank you so much.
Thank you, Nathaniel. Thank you for giving us the opportunity.
All right, thank you so much, Kathy and LW, for joining us here. Really great conversation. Lots of great stuff to chew on in that talk, that interview. I think especially your points about deflation, which are frankly counter to much of the current crypto narrative. I mean, I think it's something we really need to wrestle with as an industry. Moving along here, so crypto Twitter really lit up a couple of weeks ago when Tom Brady, the 7-time Super Bowl champion, added laser eyes to his profile picture in response to a prod by Jason Yanowitz of Blockworks. And shortly after that, Brady tweeted that he was buying the dip, which created kind of a whole nother layer of intrigue. And I think as one of the greatest athletes of our generation and of all time, his interest in our industry is just huge. Like there's not really an adjective in the English language that we can put on it. So with that in mind, we're honored to bring you a special presentation with Tampa Bay's quarterback Tom Brady and FTX CEO Sam Bankman-Fried. And they're going to be discussing crypto, entrepreneurship, leadership, and a whole bunch more. So we hope you enjoy it.
Hey everyone, I'm Sina Nader, Chief Operating Officer of FTX US, joined today with two very special guests. And although they don't really need an introduction, I'm going to go ahead and give one anyway. So Sam Bankman-Fried is the co-founder and CEO of FTX, the fastest growing crypto exchange in the world. Sam's also an effective altruist, which basically means he's focused on having the largest possible impact in the world that he can. Before FTX, Sam was on the international ETF desk at Jane Street and graduated from MIT with a degree in physics. We're also joined with Tom Brady, 7-time Super Bowl champion, one of the most accomplished athletes of all time, and has won more Super Bowls than any other player in the history of the NFL. Tom's also a dedicated philanthropist, entrepreneur, and co-founder of a health and wellness company, TB12, among other business ventures. And his work ethic off the field is just unparalleled. And Tom recently announced his NFT platform, Autograph, which is a first of its kind, experience-driven NFT platform that basically brings together the most iconic brands and biggest names in sports, entertainment, fashion, and pop culture to create unique digital collectibles. Now, Tom, the laser eyes, we got to start with this. Obviously it was trending on Twitter and people are just super curious. What sparked this sort of interest in crypto and maybe, Bitcoin specifically? Tell us about the laser eyes.
First of all, it's nice to be able to join you guys. And obviously, anytime I get to talk with Sam and one of the great leaders in the industry, it's an opportunity for me to learn from someone who's at a young age had so much success and understanding where the world is heading. First, I appreciate you guys having me. In regards to the laser eyes, I've certainly been following that community for a while on Twitter. Someone had really called me out to change my profile picture and use the laser eyes. So in my understanding, it was really a vote of confidence to really get into the conversation, as I'm such a big believer in crypto and where things are heading in the world. And I'm certainly not an expert. I'm on with Sam, Sina, we've had some conversations. So I'm listening to everybody, just excited to continue to learn.
Very cool. So now, Sam, you and Tom obviously are known for being relentless in your attention to detail, whether it's, studying game film or analyzing defenses, or perhaps, maybe sleeping in the office with the help of a beanbag chair. I guess I'm curious, what motivates you guys to keep pushing toward greatness when, to any outside observer, people would probably say, look, you guys have already accomplished so much. What motivates you to seek for even more greatness?
I think the biggest thing for me is that when you're thinking on the scale of like things that you can kind of purchase for yourself to, make yourself a lot happier, it does tail off like, somewhat quickly. And I think that, if that were my goal in life, then I would not be working, nearly as hard as I am. I mean, it's at some point you're just like, I guess you could buy a lot of yachts, like yacht number 3. But I think that's not what drives me. And I suspect it's not really what drives Tom. I think one piece of this is getting back to effective altruism is, when you look at the scale of impact that you can have on the world, it's just absolutely massive. And, when you look at, the billions of dollars, tens of billions each year that could be spent just fighting, neglected diseases in sub-Saharan Africa, right? And that's just sort of like a start at the ways that you can impact the world. The sort of scales that you're working on just get really immense. And, there sort of isn't this sense of like, oh, you've done pretty well. That's good enough. There's not much, reason to keep going. Like, no, there is. There are more people out there and there are more causes out there. And so I think that's sort of like one big piece of this. There's always more to accomplish. And I think that's something that's always pretty present to me and pretty frustrating to me if we're not, at least doing our best to get there.
And Tom, how about yourself?
Absolutely. I think I was very fortunate at a young age to find something that I truly love to do. A lot of these things, you come to the realization that you can be really motivated, internally, or you can, some people get motivations externally. I'm really a self-starter, and I've been that way for a long time. And I try to teach my kids, a lesson, and I say, the most important thing for you to do is the best that you can do, and not the best in regards to what anyone else may think. Did you do your best, or did you do the best? And it's much more important for me to do my best. And I still just feel like I have the opportunity to do that. So it's not about me going, wow, I've accomplished this in comparison to what everyone else has in my particular career. It's really about what were the opportunities that were presented to me, and based on all the things and experiences that have happened in my life, the people that have come into my life, how do I make the most of my opportunity? I'll be 44 this year, playing with a lot of guys who are basically half my age. But I really enjoy that part because I was their age one time. I needed mentors at that age. And if I can be that mentor for people in their 20s who are trying to basically accomplish as much as they can in their career, that brings me a lot of joy. And hopefully I can continue to inspire a lot of people who have hopes and dreams of doing what they love to do for as long as they can. They can look at me and say, well, he did it. And these are some of the things that he committed to. And, he seemed like he had a lot of fun doing it.
That's awesome. So let's talk now a little bit about the competition. So both of you guys obviously deal with a lot of competition on a regular basis. I mean, Tom, you've got like 31 teams trying to knock you off the top of the mountain. And, let's be honest, they've been trying to do that for a number of years. And Sam, obviously, there's lots of crypto platforms that, that want to be known as the sort of best exchange or the best platform for people that are looking to get involved in crypto. So talk me, if you would, through how you view rivals in general, and then also maybe a little bit about your personal views on sort of your desire to innovate and continue to improve in the face of all that.
I think that, one way you can think of this is you can sort of look like, hey, here's where I am. Like, here's where 3 competitors are. How can I make sure to stay 17 feet in front of the competitors? And sometimes I think that is the right way to think. Sometimes it really does come down to, look, this is going to be super close, but being in front is worth a ton. But that's only worth so much. That's only worth something on the margin. And if you're nowhere close to your competition, right, you can't be like, oh, I just want to be a little bit in front of them if you're 5 miles behind them. And similarly, if you're 5 miles in front, then you don't have to worry about oh boy, they're trying a little bit harder this time. Do we have to try a little bit harder? And so I think that a big piece of this is yeah, there absolutely come times when you're just comparing. You're comparing yourself to the competitors around you and saying, how do we make sure that we have the best product here? But I think a big piece of this is way before you get to that stage, building the best product you can and doing the best job you can. And that's just going to be 90% of what matters. And the last 10% is sort of really paying attention to exactly what the horse race looks like. But the big things are just, when we started building out FTX, we saw a lot of problems with the existing products. And sort of one way to think of it was what can we do to solve these specific problems? And we did do that in some cases, but I think even more than that, a lot of what we did was say, all right, let's take a step back. Clearly, whatever system is generating these products is wrong because it's screwing up in all these different ways, right? And so if you sort of take a step back there, how would we design it from the beginning? Throw out how everyone else has done it. Start from scratch, get out a pen and paper, stress test different ideas, and then take a look at what everyone else is doing and cross-reference it and say, hey, here's a place where we generated something totally different than the industry. Is it because no one else has really thought hard about what to do there? Or is it because everyone else has had some experience we haven't had yet? And as soon as we have that, we're going to realize why everyone else made the decision they did. But way more important is just taking a step back and doing the absolute best you can and not worrying about everyone else is only doing moderately well here, no point in trying hard. No, that it's worth just as much anyway. And just thinking hard, being diligent, continuing to iterate, to just push as far ahead as you can, and then see where the chips lie once you've done your best and what tweaks you need to make, to fit the right environment.
Tom, I'm guessing there's quite a bit of overlap with you there. I would love to know your thoughts.
Yeah, and I think the amazing part, it's interesting, Sam started in an industry that's such an emerging industry in our world. And I guess you can learn from certain people in certain areas, very different than my industry where, sports, football in general has been around for 100+ years. In the end, competition, I think, brings out the best in all of us. Sometimes it brings out some things we don't like also. It's just part of the nature. I don't think you can have one without the other. But when you have intense competition, you're going to experience these volatile ranges of emotions as well. And I think so much about life is learning to deal with, the different emotions that come into your life and come out of your life, and disappointments, and how do you learn from disappointments, and from great success, how do you find joy in that, and how do you give back to others who have helped you? So sports obviously has great correlations to any successful family and a successful business. It's really about great teamwork, and that great teamwork is going to work toward a cause, and everyone's going to be aligned in that, and everyone's going to do their part, and there's going to be really intense competition out there, and that competition is going to make you focus, and you're going to realize when you do compete where you stand. And whether you're at the top, you may be the type of person that's where you want to be, and that's what's going to motivate you. At other times, like you said, sometimes being in a race is equally important. Not everyone is in sports. You're not going to win the Super Bowl every year. The will to win the Super Bowl is really important. The will to win the championship is really important. But if it was that easy, it wouldn't be as difficult as it is. So nobody wins every time. The competition wouldn't be any good if you won every time. The reality is the will to work, the discipline, the determination, the resilience to fight through whatever adversities and challenges you find is going to bring out the best in everybody.
One question I actually have on that quickly is, I know, like, certainly in our industry, like, we go through hot streaks and cold streaks, and sometimes, like, it's just absolutely true. I mean, I'm looking internally at our company, like, we got some issues we got to sort out. And, like, I know that in, like, basketball and baseball, the evidence for hot streaks and cold streaks is, like, really weak. And it sort of seems like people are about as good as they are on, long time scales. They get better and worse. But, by and large, there's very little predictiveness from, like, one game to the next. I'm wondering, I don't know what the answer is for football.
Yeah.
And I think particularly, like, a lot of things about your career sort of like suggest that maybe this sort of like model of what you are kind of falls apart a little bit. But I'm wondering how much you sort of feel like, in moments or games or seasons where there's a ton of, pressure or things at stake, like you really do sort of like kick into a new gear or do something completely new versus it's like, you guys spent like thousands of hours practicing, like this is the last 2 hours. You already know how good you're going to be.
It's a great question, and absolutely right in all those different ways. You find different times in sports in a season in your career where you really have a lot of great momentum, and there's other times where you feel like, God, no matter what we do, we're just not. It's not working the way that we all anticipate. I think so much goes back to the process of how we're trying to accomplish our goals. Are we evaluating things properly? We know what we're putting into the process. We see what we're getting out of the process. If we're not getting out what we want, are we actually working on the right things? Because, there's a great line, don't mistake activity for achievement. Just because you go break a sweat doesn't mean you're getting anything done. So just spinning your wheels at the wrong thing isn't going to solve any problems. So much comes back to the right process. And, it's a very, there's definitely times in life where, man, I work hard every year. I feel like I'm always, the effort level's there. And maybe how we judge success, with a win and a loss, that's it's a very simple way to explain it. Sometimes learnings in your life come from some of the biggest losses. Sometimes when you lose, you learn the most. So is losing really bad if that's the case? Well, I guess if you lose every game, it sucks. You're probably going to have a job if you lose all the time.
But at least you lost and there's something to fix.
Yeah, and in your profession, the volatility and what you're going through, I'm sure on the days where things aren't going the way that you anticipate, you're probably learning about, oh, this is how we evolve and grow. This is how, so you can certainly speak to that.
Oh yeah, definitely. I mean, there are lots of times when something just won't go well, or FTX it'll crash, or like there'll be some really frustrating part of the product, and it happens. Like these things always happen. But I think the biggest thing for us is like, do we acknowledge it when it happens, understand what happened, and then sometimes we'll punt fixing it, sometimes we'll super prioritize it, but at least we know it happened, and we know where to prioritize that now, and hopefully can explain it, and at least next time if it's going to happen, it won't be an accident.
Definitely.
And so kind of coming back to this concept of sort of volatility, the last few weeks, we saw quite a bit of it in the digital asset space, especially with, recent remarks from Elon Musk about, Bitcoin and Dogecoin, for example. For someone that's beginning and sort of testing the waters, Sam, what advice would you give? And not investment advice, by the way.
Yeah, I mean, obviously it's hard not to stay glued to the screen looking at price action, and you train yourself to do it in bull markets, and then you can't tear your eyes away when things are falling. I think the biggest things that I would say are, if the only reason that you're in crypto is because you think prices are going to go up, that's okay. I mean, so be it. But like, then there's nothing to say other than, yeah, there's volatility, sometimes they go down, and that sucks. But if a lot of what you're coming from is a perspective of, look, here's why I think crypto can be really cool, and here are sort of the problems I think it can solve, and here's the ways that I think it could really help society. I think that especially when things are when they're really bloody days, I think that's a good time to take a step back and just say, all right, gonna take a breather here, and just think about why I'm here in the first place, what the goal of blockchain is, what I see as the most important parts, and those are probably still going to be there. I mean, I'd be lying if I said price action doesn't impact adoption, but it doesn't impact tech directly, at least. And so I think that, that those are good days just to say, look, if you think this is super cool, then it's still going to be super cool. It's still super cool after things go up or down. And when things go down, I think it's a good time to think about, how can you refocus on what you can do to help to build out the industry. Going up and going down are part of the same coin. Like, controlling for where you start and where you end however much you go up, you're going to go down, and however much you go down, you're going to go up. And so I think like the volatility has two sides to it. And don't forget that whether you're getting lucky or unlucky, in the moment, think about what you can do, what you can do to go back to build or grow the industry, or take part in it or learn more about it.
Makes a lot of sense. So let's talk a little bit about NFTs now. Obviously, super hot topic for so many athletes right now. And Tom, you recently announced that you're launching Autograph, your NFT platform. How'd that come to be, and sort of, what got you excited about the NFT space?
Well, first, as again, understanding where the world's heading, I really wanted to, be part of a community of people who were building the space and then contributing to it. So it's really been a crash course in this off season. All these things happen pretty quickly, but obviously the more I learn about crypto and blockchain technologies, I really wanted to be a part of building a great platform that could create opportunities for myself, other artists, other entertainment brands to create great collectibles. And when I was a kid, I was a big baseball card collector. Understanding that the kids now in the digital age, are going to want so many things at their disposal on their devices. It's a great opportunity to be involved in that for unique collectibles, but really to provide great experiences for different fans and collectors. And it's really the next generation of interaction between celebrities and their fans, or great brands and the people who love those brands. So that's ultimately what our goal is with Autograph, was to create a great platform for athletes, organizations, digital creators, musicians to launch their own drops and provide great experiences for people who really support them the most. And I've had so many supporters all over the world. I think this is just going to be a great way to engage with them in the same way that we engage with social media. This NFT space is going to be really exciting place for people to interact with in the future.
Super exciting. Very excited to see how Autograph develops from here. So kind of coming back to the topic of cryptocurrencies in general, just kind of curious, Tom, what first caught your attention with crypto, and sort of, I'm just curious to know if you've gotten involved with any investing in crypto, perhaps.
I definitely have. Really the last year, I'd say. It's funny, in our quarterback room, one of my coaches has been on it for 8-9 months. So we talk about it basically every day, the prices of the different tokens, how the space is doing. So it's definitely something that, again, it's on all of our minds because, we're very interested. We're learning more and more about these emerging markets. So I'm a big believer in it. I don't think it's going anywhere. I think absolutely there's going to be volatility. But at the same time, knowing, when there's a lot of change and there's disruption in markets, there's a lot of people that are going to fight those systems. And I've definitely recognized that in the health and wellness space. I've been someone who decided to treat my body differently than the way that everyone else treated it. I wanted to start a business that was based around the teachings and learnings that I had as an athlete and why I continued to play football at a high level. And there's obviously systems in place that don't really preach those same things. And, a lot of people will see you as, oh, you're really an outlier. You're doing something different, until they adopt it and go, wow, this is amazing. This is a great contribution. So, again, in this particular space of crypto, I'm still learning so much. It's definitely something I'm going to be in for a long time. It's definitely a marathon. And anytime, again, having access to someone like Sam to learn from, just to hear his ideas, and someone that has so much deep knowledge and understanding of what is really happening in the world and where things are going, it's very exciting for me.
Well, it's super cool to hear, how you and the coaching staff and other athletes are sort of paying attention to this space, and it sounds like actually getting involved. So that brings up another question, which is one hears that many athletes are starting to look at sort of taking portions of their salaries in alternative ways. Have you considered taking part of your salary in crypto?
It's definitely, at the end of the day, technically that can't happen. They can't pay their athletes, what they pay is in dollars. But how you invest your money, absolutely. So I definitely think there'll be more solutions as this is more widely adopted. in all areas of our lives. And how we pay for things now is very different than how we paid for things when I was a kid. At the end of the day, it's transactions and how they're happening, between people in the space of 3 or 4 feet. It's not exchanging dollar bills anymore. It's passing along technologies that are allowing people to wire information and wire amounts to people's devices and so forth. So the world is changing. I mean, we all have to understand that's just the way it's constant change, and you could be ahead of the curve or behind it. And I'm choosing to be ahead of it. And again, as someone who's always kind of wants to be on the forefront of things, that I'm gonna try to help create the trend and adopt it and recognize that this is where the world's heading.
That's awesome. So coming now to the final topic here for you guys, giving back. Obviously, giving back and community development are topics that we know resonate with both of you guys. Where did this come from? And, how do you guys incorporate charity into your respective careers? And Sam, maybe you want to kick us off.
Yeah, I mean, I guess in some sort of irrelevant technical sense, I was always interested in it, and always wanted to see how I could do the most good. And that had absolutely no impact on what I did for the first 20 years of my life. And I just sort of pretended that maybe it couldn't have impact, or I don't know, there's nothing I could do or something like that. And I think it wasn't really till college that I sort of challenged that sort of implicit belief of mine. And it just immediately fell apart. And it just super quickly became clear that no, okay, there are things you can do. I think there's a lot of examples of this. I mean, you can look at people dying of diseases that most countries have basically eradicated, and that it costs dollars to treat, and thousands of dollars per life saved. And it's just hard to think that there's nothing that we can do to help that. Animal welfare was one of the first things for me as well. Just, there are animals who are not treated so well, and you sort of do the math and then, see what they go through. It's not pretty. And, you can think about how little we seem to think about the future of the world, except on very rare occasions. Started to become clear that no, obviously there are things I could do. And, if nothing else, I could just donate money, right, to places that were doing great things for the world. And, alternately, I could sort of work for them. And I sort of went to them and was like, hey, what you guys want? And they're like, Sam, we do not want you leafleting. You'd not be a great leafleter, no offense, but it's not. I don't know. I don't think that's going to surprise anyone. So, that wasn't sort of the path that I went down. But some of the people I know who are doing the most for the world are just working directly for some great organizations. I think for me, what it's come down to so far is how can I, give as much as I can to the places that are sort of doing as much good as they can. And that's sort of, what's ultimately led me down the path that I've gone in my career.
Very cool. And Tom, how about you? How do you think about giving back in the community?
Yeah, it's ultimately what we're all here for is to leave this world a better place than we came into it, and to give people opportunities that it's definitely harder for some people than others. And I think when you recognize those things on very macro levels, like Sam is talking about, or on micro levels, things that may impact you and your community, your neighborhood, and your family, everybody has a different idea how they want to do that. And I think a lot of it just comes from certainly a matter of perspective. And the perspective is there's a lot of people that helped you in your life get you to the point where ultimately you got to, whether they were mentors, whether they were parents, whether they were certain causes or people that really supported you. It could be emotionally, financially. All those things ultimately shape who we are. And I think when you become successful in different ways, and whatever that could, like I said, successful in the way that you can help people maximize their potential by donating to their causes financially, or how to support them more in one-on-one roles, like a mentorship role emotionally. Teachers do that, and they help educate people. So everyone, can look at their life and understand that there's definitely a need to help other people, help our communities. My wife is a huge environmentalist, cares deeply about our planet, what we're doing, how we can create a more sustainable planet for future generations. So it's really up to everybody in their own individual way to contribute their time or energy or money or what other resources they may have to give back to things that are important to them and that really bring them joy, bring other people joy, and help other people succeed. So it's all very important. Obviously, I appreciate all the work Sam is doing in the world. He's made huge commitments already at such a young age to helping a lot of different people, a lot of different organizations, certainly creating sustainability in the planet. And obviously that's a a place of need for all of us. So it's a good place to focus on.
100%. Well, guys, this has been just amazing. Really, really fun conversation. Appreciate you both. And thank you all. And thanks to the viewers.
Thank you.
Thanks for chatting, as always.
Great. Well, special thanks to Sam and Tom. It was such a pleasure to have you both join us at Consensus 2021. I hope all of our viewers enjoyed that. I mean, just a lot of great insights into that whole conversation. Moving along to our final session here, we're going to focus in on Uniswap, which is really one of the true success stories of our industry. Hayden Adams started off 2018 with just a small grant from the Ethereum Foundation, a big idea, some big ambitions. A couple of short years later, Uniswap has become like one of the most important properties in the entire industry, and it's just an amazing success story all around. So I'm going to hand it over to CoinDesk's Zach Seward, who is going to lead this next conversation.
Actually, you know what? Hey, Fred, I know your name from reading it often. Can you say your last name for me, please?
Airsam.
Airsam, cool. Former radio reporter here. Used to have to do that all the time. So thanks for bearing with me. All right, sounds good, guys. Let's get this thing going. Hey there, I'm Zach Stewart. I'm an editor at CoinDesk, and I'm pretty excited about this panel that we're going to undertake right now. I am joined by two really important people in the crypto space at this point in time, and we're going to have a nice wide-ranging conversation about Uniswap and the future of DeFi. Joining me is Fred Airsam. He is a Coinbase co-founder who now runs the crypto investment firm Paradigm. And I'm also joined by Hayden Adams. He's the creator of the Uniswap protocol and a recently Fred-appointed metaverse fashion icon. So Hayden, whatever those pink shoes that you were wearing the other day that Fred captured in a tweet, those are really sick, and they complemented your unisocks really nicely. I wanted to start in on the story of socks because I think it does really speak to this this DeFi community. What is the deal with unisocks?
Yeah, so in the spring 2019, the first thing I did after raising my seed round for Uniswap from Paradigm, the very first thing that I tasked the new team with was to build a decentralized socks. Essentially, the idea was that we issued 500 socks tokens. Each token was redeemable for a physical pair of socks mailed to you anywhere in the world, and we put them in a Uniswap liquidity pool. And that gave it basically the market structure where the more socks people bought, the more expensive socks became. And so there was sort of this, it kind of feels a little bit like StockX, but it's crypto, and it's and it uses Uniswap. And I think for the first year or so, socks were worth between $15 and maybe $50 or $100. This is in 2019, but somehow during the NFT craze over the past a couple of months, they've gone up to I believe they hit a high of $150,000, and then are back down maybe in the 80s now, something like that. Something pretty crazy last week. Someone redeemed 10 socks tokens, meaning they permanently burned their token, and we mailed them a pair of socks. So at a price of about $90,000. So they spent almost $1 million on socks.
Just the most amazing socks in all of the world. Lovely white and pink. They really are quite sharp.
Just to add one thing to this, it actually turns out that Matt Wong, my co-founder, is like very deep in different fashion rabbit holes and found the designer of the shoes that Hayden was wearing, which I proceeded to Slack to Hayden at probably 1 a.m. on a random weeknight, and he hit the Insta buy button on, which is the background on that story, and it turns out to just aesthetically work very well with the unisocks.
Oh, they looked amazing. I think metaverse fashion icon was spot on that one. So that kind of gets us in the deep end of this crazy thing called DeFi. I think zooming out, Hayden, I'm going to stick with you real quick. How do you explain what Uniswap is to someone who has no familiarity with it? What works for you in explaining what this crazy automated market maker is?
Yeah, I think that Uniswap is basically a protocol for trading cryptocurrencies. So same way that Bitcoin is a protocol for transferring digital assets, and Ethereum is a protocol for creating decentralized programs or smart contracts. Uniswap is a program on top of Ethereum and a protocol on top of Ethereum that makes it incredibly easy to exchange cryptocurrencies. And it's a little bit different from the structure of traditional exchanges, and it kind of makes usage of the decentralized nature of Ethereum in a unique way, and it makes usage of smart contracts in a unique way. It was kind of one of the first applications that introduced this idea of automated market making, which essentially lowers the barrier of entry to participating in market making to the point where basically anyone can do it. Traditionally, professional market makers, do the vast majority, or basically 100% of all market making, and the kind of ability for anyone to spin up a liquid market in an asset is actually somewhat new and pretty exciting.
Yeah, and it's since launched in 2018, sort of since become a key cornerstone of what now on Ethereum is a $60 billion concern, the DeFi sector itself. I'm going to throw this to Fred. I want to zoom out a little bit to the recent sort of sell-off we've been seeing in the market. This sort of sell-off, a little bit of panic, market's a little bit jittery. It really taxed the infrastructure of centralized exchanges, of which you're intimately familiar from your time at Coinbase. DeFi, on the other hand, a lot of decentralized exchanges seem to handle that pressure quite well this time around. And I wanted to speak about sort of the resiliency of the DeFi market here in 2021 and what it looks like from the eye of the storm. Fred, I'm going to kick this to you first, but Hayden, I definitely want your thoughts as well. Sort of in this time of market volatility, what are your thoughts, Fred, on how DeFi has responded and how decentralized exchanges have borne the brunt of some of this activity?
Yeah, well, first, I think it's worth noting crypto has obviously gone through many cycles over the last 10 years, some macro, some micro, and sort of the only way I think the industry gets from zero to the future of money, the future of the financial system, the future of internet applications, it's inevitable there's going to be a bunch of volatility on the way. And I think those of us who have been fortunate to be in this for long enough kind of see it and probably just chuckle at this point. Specifically to DeFi infrastructure, I think you're right. I think it's quite encouraging as to the resiliency of DeFi infrastructure. One of the really scary things I think about DeFi is that it's this open permissionless network where anybody can deploy any application they want. And of course, that means that there have been all sorts of spectacular failures in the past. The great thing about that, though, is that there's a lot of stress testing along the way. And to the extent that any individual building block doesn't work, we tend to learn it early and rather quickly because there's strong financial incentives to manipulate and break things. So what is both viewed as a bug, I think, in DeFi or a risk is also a huge feature over a long enough time horizon. We obviously learned a lot of hard lessons, I think, in the flash crash last year, especially with respect to DeFi infrastructure. Obviously, Maker had a pretty tough time there for a week or two. And this time around, down 20, 30% in the course of 48 hours, and not a whole lot to be seen. So, I found that very encouraging.
Yeah, I mean, I thought it was remarkable to see, just having covered, Black Thursday of March 2020 versus whatever we're calling, this recent sell-off here in May 2021. Hayden, I did want to ask you sort of like, comparative analysis, those two big moments in the market in the last couple of years. What were the differences from where you sit between how Uniswap handled those moments in the market?
So one thing that's, pretty interesting is that, to some extent, Uniswap handled both of them flawlessly. I think that, something that was pretty interesting about this time around is that we had just launched Uniswap v3 maybe 1 or 2 weeks prior to that. And so it was definitely a really great stress test for Uniswap v3, where, in part due to this volatility in the past 2 weeks, we've got to kind of see the efficiency in action. And, as of, I think today, maybe for the first time, Uniswap v3 launched, I think 16 days ago. Uniswap v3 is now doing higher volume than any other trading protocol on Ethereum.
Including V2. I saw
including
that.
V2.
I saw that
V3
flipping V2.
Right now, V3 is the #1 trading protocol, and V2 is the number trading protocol. But speaking to like the resilience of DeFi, I think in general, scaling up centralized exchanges or centralized infrastructure, usually you have growing pains as you add on more users, and definitely I think in traditional in centralized things that tends to play in as like servers going down or downtime. And something that's really nice with DeFi is that there is never any downtime, and so there hasn't been a single moment of that. It does, there is increased demand for block space, and so you do see gas fees go up, and that's kind of what scales up instead of basically just having downtime. It just means that it's a little bit more expensive to get your transaction through.
Yeah, I do want to go back to that, but I do want to also go back to this V3 concept. So you guys launched, V3 you mentioned a couple weeks ago. Why is V3 important? Like, what's the main, why is this a better mousetrap? Like, what's the main difference between what Uniswap was previously to what Uniswap V3 can offer?
Yeah, so I think that Uniswap V3 has a lot of similarities to V2 in that it, keeps the decentralization, it keeps the automated market making, it kind of keeps, removing the central points of failure, and it keeps the sort of permissionless nature of it. But what it adds on is this extreme capital efficiency increase. V3, the kind of main thing that people pointed to historically as to the problems with automated market making was that they were largely inefficient systems. And in V2, for example, maybe 25% of the liquidity existed when only reserved for like buying ETH if it fell below $10 or something. And here you have just far more capital that can be concentrated much closer to the market price. And that the way that plays out is that it gives much better prices for traders, and it gives liquidity providers a lot basically allows them to be more efficient, take on sort of more opinionated positions, so they can kind of adjust their exposures as they want, and that ultimately plays out in them either earning higher returns or at least taking on positions that they would prefer.
Gotcha. Last one before I shift over to Fred. Hayden, last question. When liquidity mining on Uniswap V3? I know this was a gangbusters feature at V2 launch. Any plans to roll that out soon?
Yeah, so first off, one interesting thing about liquidity mining in V3 is this whole thing where you can be so much more efficient with your capital means that if you were to do liquidity mining, you could kind of do far less liquidity mining because you could incentivize far more efficient capital. And so you could basically be more efficient with your liquidity mining. In terms of when, I think it's going to be very soon. One thing that we've seen in the past couple of weeks is basically a grant from the Uniswap grants program, which comes from governance that was issued to someone who's working on liquidity mining smart contracts. And so we're kind of seeing the community build this out. There's a spec that was released from Dan, who works with Fred at Paradigm, and is generally a great person. And there was, he released a kind of a spec on how to do liquidity mining in V3. There was sort of a lot of speculation when we first announced V3 because it was much more complex, and liquidity isn't all identical. There was sort of some open-ended questions from people as to would it be possible, and the answer is yes, it's completely possible, and it's being built. So.
Okay, well, that's good to hear. The yield farmers out there will be happy to hear that, so thank you. I'm going to zoom back a couple of years and go to Fred. So Fred, you obviously have a background at Coinbase, a background in one of the biggest centralized exchanges in the world. Zoom back a couple of years when you decided to invest in Uniswap, an upstart decentralized exchange. What was the vision there that made sense for you in terms of investing in that project?
Oh, geez. Well, a combination of amazing founder and amazing idea that could be really big. The founder part is likely self-evident to a lot of people today, and likely in this interview as well. Hayden clearly loves what he does and is obsessed with the idea maze, and I think is a natural both on the mechanism side and on the community building side. So it's been really cool to see that play out over the last couple of years. On the idea side, a number of people at Paradigm, myself included, have been obsessed with the idea of decentralized exchanges. And if you rewind the clock to 2016, 2017, that was sort of this abstract notion and dream. And the question all along was, how is this going to be done really elegantly? And I think when we saw Hayden come along, starting to actually implement the idea that Vitalik just threw out on a public forum in the comments section for free on automated market makers, which, you know, I think had been in the academic realm, but nobody had really done it before. Once one understands that concept, one can see just how powerful and elegant it really is. And I think we just had a belief that could really work in practice, and that Hayden would be the guy to do it. And of course, what we've seen over the years is AMMs are really awesome. The idea that you could trade without needing a counterparty or another human on the other end, or just pinging a smart contract on a blockchain that's up 24/7 and being able to do it programmatically and atomically is pretty awesome. And I would say that it fits a broader principle that we like to think about, which is the most powerful ideas in new technologies are the ones that are uniquely enabled by the new technology. So the idea that there's a single global liquidity pool that anybody can freely add to or trade against, I think is uniquely enabled by crypto and by Ethereum in this case. So really all the pieces kind of came together on this one.
Fred, I'm going to stick with you for sort of a DeFi 101 question. You know, it's easy to see the total amount of value that are locked in these platforms. It's less easy to see who is using this stuff. As it stands right now, who are the primary users of Uniswap and other AMMs in the DeFi ecosystem? What's the user type that you're seeing that's using this most frequently right now?
Well, I would in part defer to Hayden on this. So Hayden, if you feel free to correct me on this one. I think that most of it today are just individuals who hold Ethereum and other Ethereum-based assets. And I think kind of the magical thing about that is at one point, I think a lot of people ask the question, why would anybody use a decentralized exchange when centralized exchanges seem so liquid? It's much easier to use. It's like this website. Everybody knows how to use web apps. These DeFi apps are kind of annoying and they're obtuse. And I think what's happened in practice is once you're in DeFi, it's just way easier to use other DeFi stuff. Like you literally just have one wallet that works with every application, and in order to place a trade, you barely even log in. You just hit a button, and that's it. So I think it's very interesting to see the user behavior behind the use of Uniswap and how that's true for other DeFi apps as well. And I think I think most people underappreciate the power of the momentum behind the ecosystem in that sense. And of course, there are now institutions who are plugging into protocols like DeFi, just like any professionalized trading and capital markets environment. There are market makers as well. It's starting to kind of professionalize and span the gamut.
Yeah.
Something that I'll add to that is just, one of the, something that Fred got at earlier was that it's this global liquidity pool that's kind of permissionless. And, something that's cool about having this kind of single global liquidity pool is that it's, accessible by anyone and kind of can serve a very wide variety of use cases. It's kind of useful for a pretty wide range of users. So, some of them are sort of smaller users who just want to convert between cryptocurrencies. Some are these institutional folks that Fred mentioned. And then there's this pretty, wide range of even, developers and applications and other DeFi applications that are, building, and they also need the ability to convert between assets. And having this kind of on-chain liquidity source means that other on-chain applications can tap into it. And so, Uniswap is kind of for everyone, and as is basically the rest of DeFi.
Yeah, so I wanted to ask about that, and you kind of mentioned it, like when demand for block space is high, so too are gas fees, right? And it's something I think small users of DeFi maybe feel more painfully than big users. And I'm curious for your perspective on sort of the pricey nature of the Ethereum mainnet here in 2021, and whether there are solutions that you can implement from a technical point of view that reduce those transaction fees for, again, the everyone in DeFi. Do you have any thoughts on that?
Yeah, I mean, so in part, it does just kind of speak to how fast the sector is growing. It wouldn't be as expensive as it is if the demand hadn't kind of increased so much for block space, right? And there's this general idea where it's very difficult to kind of increase the throughput without centralizing. And there's various kind of ongoing efforts to increase the throughput of decentralized chains, right? And the two kind of rough categories would be layer 2 scaling, which includes stuff like optimistic rollups and NZK rollups, and then there's layer 1 scaling, which is basically sharding and proof of stake. And definitely there's a huge amount, hundreds of millions of dollars and thousands and thousands of hours and developers kind of pouring into these solutions, and I think they're coming very quickly and very fast. And we've even seen kind of the throughput of Ethereum increase even over time this year. But I'm expecting over the coming years that will increase orders of magnitude. And it's definitely important, right? Because at the moment the smallest users are priced out. And it's an unfortunate side effect of how much demand there is from kind of even bigger users, and the fact that Ethereum can barely support the traction just from the biggest users, let alone kind of the orders of more magnitude users that are going to be coming. And so it's something that I'm expecting over the coming years will kind of continue to be worked on, and I'm expecting these layer 2s to start coming online this year. And we'll see, a lot more users and hopefully cheaper transactions as well.
So like from the Uniswap playbook, is it like, do you wait for the layer 1 scaling that comes with ETH 2.0, or do you sort of wait for that to run its course, or do you sort of seek a layer 2 scaling solution that you implement before ETH 2.0?
I think that layer 2 is a very important. I think no matter what, we're going to need layer 2s, and I think we might need. We're basically going to need Ethereum, like sharding, just to support the amount of layer 2 data availability. I don't want to get too technical here, but basically I think that we're going to need both, and once we have both, it's going to be able to do millions of transactions per second essentially.
Gotcha. I mean, I think DeFi, I'm going to kick this one to Fred, because I think DeFi really is a powerful part of this crypto economy, right? Like the ability to transact, again, as you mentioned, without the need for a counterparty is quite powerful. Fred, as an investor in the space, I want to throw this to you. What are the other pieces of the puzzle that DeFi still needs to build, invest in, enhance for the promise of the system to reach its full potential? What are some of the missing pieces that you at Paradigm might be looking for when it comes to investing in the next big thing?
Yeah, it's a good question. One mental model that Matt and Dan Robinson, who has worked a lot with Uniswap on our team, both like to use is if there's a periodic table of all of the financial primitives that one needs in a financial system, what are all the elements on the table, which exist today in DeFi and which do not yet exist? And I think what we're seeing is just the natural kind of progression of basic financial building blocks from simple to complicated as one would build a new financial system. Uniswap, you could argue, is one of the most basic, very simple trading, obviously extremely important and core to many functions, and may even be a composable element that is wrapped into other functions up the stack, which is why it's so important. Over time, we've obviously gotten other things like lending, some areas that are very clearly big in the existing financial system, but feel like they really haven't quite yet taken off in DeFi, include options, huge market, bigger than spot markets if you just look at trading in the existing financial system. Insurance is huge in the existing financial system. Exactly what DeFi native insurance should look like, I think, is still an interesting open question. And even in the ecosystem today, protocols even take protocol native approaches to that and having their own insurance funds in some cases. So those are two big ones. One really big holy grail in the existing financial system, which might be especially challenging, but will of course work one day in the DeFi context, is unsecured lending. A lot of the economy has some form of unsecured lending underpinning it. Of course, that's challenging in the DeFi context because it requires some off-chain actions to occur And just outside of DeFi and crypto in general, that's always been a challenge. That goes back to people trying to do supply chain applications in 2016, or these enterprise kind of things that never went anywhere. In any case, that's kind of the high level mental model we like to use. And, I do think part of this just takes time. People don't need derivatives until spot markets exist. Volatility goes down and you need more capital efficiency and all these things. So I do think there's sort of a natural progression to the whole thing. And it'll be awesome to see the whole ecosystem grow in that way over the coming years.
One thing, just to riff on the periodic table thing, like I think something that's pretty interesting is, not only will it be kind of, one by one, replacing all the TradFi stuff, but I think that beyond that, we might be discovering some new elements as well. Things that kind of simply weren't possible in traditional financial systems might be made possible in DeFi, and that's pretty exciting as well.
Yeah. One thing we like to talk about in that vein is it might be that the number of financial products that exist in the world is increased by multiple orders of magnitude thanks to DeFi, because anybody can just create anything and the cost of spinning something up is effectively zero. It's the same phenomenon we saw with content in the internet. Before YouTube, creating a video was really costly and you could only distribute it over a cable network. Now with YouTube, anybody can freely upload content and anybody can freely watch it. And as a consequence, the number of videos in the world probably increased by multiple orders of magnitude. Same thing here with financial products.
Yeah, I think it applies to financial products and probably also, financial assets as well. I'm expecting, many, many orders of magnitude increase in just the number of assets that exist.
So Hayden, do you see your work from here out just servicing this basic financial primitive that is decentralized exchange, or do you see yourself sort of expanding across that periodic table in the near future?
I think a little bit of both. What's one thing that's really important, and I think I think sometimes DeFi has struggled from like a lack of focus, and everyone wants to do everything, and it's in part because so little has been built and it's so exciting. And I do think there's a lot of value to just like building the best version of a thing that you can. And I don't think that like the scope of Uniswap is small. I think that it has like a pretty wide scope to what it can do. It's kind of simultaneously, placing like market making and whatever. It kind of gets it at a lot of different areas at once. And so I think that there's a lot to do with Uniswap, and I'm not even close to, out of things to kind of explore and think about just in the kind of trading space. But to the extent that there are other areas that are interesting and beneficial for DeFi and for the world generally, I think that we're pretty interested in exploring those as well.
Gotcha. Before I ask both you guys about DeFi Summer 2.0, which is definitely coming up, I want to go back to DeFi Summer 1.0, which was last summer. And one of the big events of DeFi Summer 1.0 was the Uni airdrop, in which Uniswap rewarded all past users of the protocol. I think it was something like 250,000 wallet addresses with
It's a lot.
It was like more than that, with a pretty substantive amount of tokens that have since climbed in value. So basically what you did was you created a couple 100,000 voting members of this community who could decide the fate of this protocol going forward. It seems like the governance model, though, is fairly conservative. Not a lot of changes have been made. I think we saw with there was a proposal by like Dharma that was like, it was hard to reach the threshold where action could be taken. So I wanted to ask you about sort of the conservative approach to governance that I interpret in the Uniswap governance model, and how you're thinking about through incentivizing voter participation and engagement in these models as you decide as this community decides the fate of these platforms going forward.
Yeah, so I think that definitely I would say it is a conservative approach. To some extent, you see some very, very fast-moving governance systems, and various projects have varying levels of decentralization and security. And some of the time, it kind of amounts to like it's a multi-sig, and so they can move very, very quickly. And from day one, we were kind of committed to it being as decentralized as possible and have it sort of fully on chain. And so it was like a little bit of a slower process with a higher threshold for things passing. But to some extent, there's like this element where I think that basically the main proposal that has kind of been the most effective there's almost like the idea is the things that like some things can be automated, right? and those things should be automated. And some things can be, incentivized, right? And those things can't have been incentivized. And then the goal of governance is basically to coordinate the human element of, the protocol of the ecosystem. And I think that, there's sort of this how do you have humans effectively collaborate and how do you have humans effectively coordinate is a pretty complex problem, right? And a lot of kind of decentralized governance systems, it sort of amounts to token holders vote on everything, and that can be a kind of early on that right now some of the projects that do that, it's sort of a faster process, but I think that to actually be effective, you probably need small groups of humans making decisions and coordinating, and then sort of deferring to this broader decentralized governance system, and kind of getting funding from them or whatever. And so one example is the Uniswap grants program, which has been extremely effective. It basically got this. There was a governance proposal a few months back, and it got a bunch of Uni tokens, and since then it's allocated out to maybe 30 to 50 projects. And so that was one proposal, it was one vote, but the kind of impact of that has been very incredible. And there's been dozens of teams that have been funded from it. There's been tons of events that have been funded, and there's actually been other committees that have been sort of subcommittees essentially that have been funded that are now allocating out Uni on their own as well. And so it's kind of slow. I think it will be slow, and then it will be very fast as some of the infrastructure comes into place.
Gotcha. We got a couple of minutes left. I'm going to kick this to Fred. Whether it's governance or whether it's some aspect of the DeFi, this DeFi experiment, Fred, what are you looking at in the next couple of months for DeFi to take the next step in its growth?
That is a good question. I will say one thing I think will be very interesting is I think for the first time this year, crypto has entered the mainstream consciousness and expanded to use cases that are outside of things that we think about as explicitly financial.
First of all, we have to say hi to Abe, which is Hayden's dog. Can we get a close-up of Abe, please? Come on. Come here, Abe. Come here, buddy. Come here, bud. Look at that guy. All right, sorry, Fred.
Uniswap is so easy, even a dog could use it. Yeah. So I think one thing I think will be very interesting is watching some of that new behavior intersect with DeFi. So I think we're seeing the NFT world and sort of the DAO world, both of which are related, start to do things that are kind of DeFi-ish. And I think that mashup will be quite interesting. I'm looking forward to a world where just to continue to riff on Uniswap's value proposition, where the majority of volume in Uniswap is not people clicking an interface to trade, but it's other autonomous applications using Uniswap as a programmatic building block. And that's where it's coming from, right? It's sort of like there are video games where asset A is traded for asset B, or there is an up the stack financial application or protocol that needs to do spot trading of assets in order to perform whatever it's doing. So I'm looking forward to seeing just a number of things, sort of a proliferation of financial products in a whole bunch of different ways. Seeing the space just get more programmatic and seeing people remix the Legos in more interesting, complicated, and nuanced ways.
Yeah, that's the cool thing about composability in this space. It's really fun to watch. This has been great. I think we're going to have to cut it for time here. Fred Ursam and Hayden Adams, thanks so much for spending time with us here at Consensus and talking about the future of DeFi. Hope you guys have a great night.
Thank you.
See ya.
Hi, everyone. I'm Michael Casey, Chief Content Officer at CoinDesk. So this brings us to the end of the formal Consensus Conference part of the program, at the tail end of a 4-day extravaganza. I wish, just as I did last year, that we could have celebrated this occasion together in person. But I got to say, for the limitations we continue to face in the virtual environment, This was incredible. Amazing presentations, rich discussions, unique experiences, and the downright fun of the desk experiment. I must also thank the many great sponsors who supported Consensus and the Consensus Unlocked 101 sessions. We could not have made this event happen without your support. Thank you also to the speakers, more than 300 of you, who kept us informed and engaged for 4 days, and the 100 or so additional guests who showed up for our special CoinDesk TV programming. I also need to thank an army of CoinDesk staff and outside contractors who worked tirelessly, sometimes on 12-hour days, to keep the many layers of this conference running. To Dave and the sales team, to Mina and the product group, to Dasha and the events operations team, to Joanne and the crew at CoinDesk TV, to Mark, Kevin, Zach, Noel, and the editorial and research folks who moderated panels and reported on the event, and of course, to Aaron and the programming team. Thank you so much for delivering what I think was the most impactful consensus in the event's 7-year history. And to you all, our attendees, thank you for your participation, for your enthusiastic engagement in the chat rooms, your inventive new uses for Desk, and for bringing this event to life. Now, having said all of that, we still have the hash coming up on CoinDesk TV, where the crew will hash out and break down what we just heard. But for me, it's bye for now. Thank you.